Good morning, everybody. Today is the fifth day in the month of January 2022. My name is Heritage at this market analyst and at HotForex. And as usual, we'll go through the markets, look across board and see what the dominant sentiment is, see if there are any opportunities available, and then how we can take advantage of it. But please, like always, do not forget that this is just a communication material and nothing in this communication should be considered as investment advice or recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a higher level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment is a more weaker risk off, right? Is risk off more or less, right? Not a solid one, but equities are mostly lower. Risk assets are pushing lower as well, not by the largest of margins, but it's there. So we can also call it a more mixed environment with a downside tilt. I think that's a better way to say it. And if you look at cross board, starting with the equities, the US 500, which is one of the major barometers to measure sentiment. I mean, it gives us a very big picture as to what's going on in the equity space and by extension, risk generally. And if you look at it, yesterday when we were talking about this, we're looking at this, we said, yes, we started risk on, but when we're trading into, let's be very watchful of this level, right? It was the highs, it was a resistance level going back a couple of sessions, right? Tested a couple of times, and then even heading into these levels, especially that it was also, I mean, the highs, more like all-time highs ever, right? On this particular index. I mean, we wanted to be very watchful of that level. We said we didn't want to be caught buying into levels like this, right? And we wanted to be watchful. And then later in the day, we had, ISM manufacturing data yesterday, ISM manufacturing, employment index, and even the PMI itself. The PMI was even weaker than expected. We also had the JOLTS job opening for the US as well, also weaker than the previous numbers that we had. So that in itself also saw pressure for risk asset generally. And then we saw US 500 push lower as well. Now in today's session as well, we started a little bit lower. Now we are paring back some of those losses, and then we are seeing that back and forth, which is not really a solid sentiment you want to hold on to for a while or for longer. So for now, mostly a mixed environment. And if you look across board, we have a similar story there. Nothing really major to work with in terms of sentiment and risk asset. For VIX, volatility index, yes, we broke above the 150 moving average here on the 30 minutes time frame here, right? But even though intraday we pushed higher a bit, we still kept printing lower highs. Right. If you look here, we keep printing lower highs, lower highs all through. And then we're still overly pressured, right? So yes, we could say overall, equities have been pushing higher, but at these levels, at low levels like this for VIX, at high levels like that for the S&P 500, also the US 500, you want to be very watchful and very prudent with your approach, right? So there's that also watch out for. For the bond market, which is one of the major focus for markets right now, especially on the yield side, right, which has been a very major supportive factor for the dollar in recent time. But even today, right, we've had the dollar even weighing out some of those gains that we saw yesterday and even a couple of days back as well. But for now, for the bond market this morning, starting flat. And if you notice, over the last couple of sessions, we've started flat. Right? Over the last couple of sessions, we've started flat almost every single time. Flat, right? More lackluster to start the day. So the fact that we have a flat start today doesn't really mean they will end like this, right? But something you want to also watch out for, be watchful for. If we see the bond market starting to push higher as well from here, that would obviously put pressure on the likes of equities, the likes of the AUD, the NZD, the CAD, high beta currencies generally, and provide more support for the safe haven currencies thereafter. So there's that also watch out for. On the oil side, right? We had OPEC meeting yesterday as well, where they really just kept status quo. Didn't really change anything major in terms of oil output, in terms of production quotas. And then they stuck to the 400,000 barrels per day, production. Then we just had muted reaction. Really, I mean, nothing really, serious right there in the oil space there. But it was just as expected. And then if you look across board, we've really just remained in an overall no man's land, trading mostly flat, just meandering around these highs that we had around over this $75 per barrel level, and nothing really tangible to work with over the last couple of sessions, right? So we'd like to see something more tangible, something more actionable, new information, because even with the virus cases that could cause, slow down, restrictions, for even and could even pressure oil. We've not really seen a lot of lockdowns, a lot of restrictions. Why? Because the virus cases have been mild, right? We've not seen high hospitalizations, we've not seen high fatality rates. So yes, we had this, but for now, it's still one of those patient days. We're just starting the year. Liquidity just coming into the market back. I think information is not really in full flesh just yet. So there's no need to be in a hurry to jump into markets, but it's what we have right now. For the dollar index. Now, yes, the dollar has been enjoying, like, for example, in yesterday's session now, right? And even on Monday for the week generally, we've had that supportive flow, right, in the USD on the back of rising bond yields. But even in all of that, if you still look across what we've still maintained this overall range over the last couple of weeks, almost all through December, and even now as we started January. Now, this is very, very interesting because number one, markets are pricing in a couple of rate hikes for the US from the Federal Reserve, about 3 going into the year 2022. But even with that, that's already a very high bar, already a very high expectation. And then now the question now is, can they really say something that could even make us even price in even more hikes for the year, right? Or they would even disappoint us a bit and say something that will even reduce expectations even going into the year. So all these questions are, what's running through market participants' minds. And that's why you're seeing that the dollar index has not really given us so much to work with. But in as much as we have the Federal Reserve keeping positive concern about inflation, you expect dollars to keep being supported on the back of expectations for rate hikes, high inflation expectations, and obviously that should push this higher some more. But for now, for the time being, I think we're in that space where we want to be more patient and patient. For now, in terms of strength and weakness for currencies, we have the euro leading the FX majors. We'll talk about this in a bit. We have the euro leading the FX majors. We have JPY, CHF a little bit supported. We have NZD and AUD pressured a bit. But even with all of this, the measures or the ranges are not that large and not that much. Yesterday, before I go further, yesterday we talked about USD JPY. AUD JPY rather. And in this AUD JPY, we said we had a more, slight tilt positive. And then even with all of that, there was not so much to work with. But this was an interesting one to look out for, where we said that if we just pay attention to this key level coming back from the 28th of December, previous resistance, support a couple of times. And we said, if we can clear out this level, I remember when we were doing this video, we were trading around this region. We were saying we are finding resistance around here. I remember saying if you can clear out this level, right, we could see further pushes to the upside. So we had that clearing out, retest a couple of times, 1, 2, and then we pushed higher about 60 pips. There are about 2 of the upside on that particular one. Now in today's session, now we can't really hold on to that for now. We are still being more lackluster in trade. So I think I'm still going to be a little bit more patient with this one. In terms of the euro as the leading currency, as the strongest currency right now, for me, I feel it's more short-term, more pullbacks. I don't read too much into this, and I'm still being on the very bearish side for the euro. Reason being, the ECB is expected to be one of the laggards in terms of the major central banks, barring obviously the BOJ and the SNB, right? The ECB is going to be slower compared to the likes of the Federal Reserve, compared to the likes of the Bank of Canada, compared to the likes of the Bank of England, the RBNZ. Even the RBA should even be faster in terms of tapering and even rate hikes compared to the ECB. So in as much as we have all of that, or with having all of that in play, pressure for euro is still very much in play. Now, in as much as we have that strength in the euro right now, I feel it's still more of, pullbacks, nothing really tangible to hold on to. I would really like this. If you look at something like, I just look at two currency pairs. Okay, good. I'll look at two currency pair, euro pound, and I also look at euro JPY, euro USD2 as well before we finally call it a day. Now for euro pound, because of the divergence on the central bank side, I still expect further weakness for euro against the pound, and we've seen that play out over a couple of sessions. Now, if you look closely, we have kept below this 50-hour moving average and even the 100-hour moving average as well. And then every time we came back to retest it, every time we came back to test it, we've always pushed lower and lower. Yes, we could argue that where we're trading is pretty much low. I mean, this is the low going back a whole couple of, I mean, this is for the year, first of all, for 2020. For 2020 was the low, right? Way back, the last time we had levels like this was early 2020. Sorry, I meant 2021 rather. Was early 2020 and then late 2019, right? Yes, we could argue that we're getting so low as well, but I mean, there's still a little bit of room to the downside if you just look at, you know, what did I do? All right, let me clean this up. Okay, good. If we just look at this level here, right, there's also still a couple of levels. I mean, just a little bit, but it's still there and still very much evident. So if you look at it closely on a shorter term basis, right, I would just like to see, right, I mean, there's still some room to the downside. If you can get it under retest of this moving average, maybe the 50, I would still be very much interested in this, looking for downside pushes on this particular one for, you know, not just today. I mean, since we don't have so much to latch onto, this is something I'm very much attentive to for now. For the Euro JPY, this is now countering, you know, what we have on Euro pounds. And it's interesting because even with that, it still falls in what we're talking about. Yes, the ECB has started to lag behind the likes of the Federal Reserve, the Bank of Canada, the Bank of England, but against JPY, Euro is still a favorite, right? Because JPY is excited to even keep it really low. And even from comments from yesterday from Japanese authorities, right, central bankers as well, right, there's still not so much pressure, right? Or there's still not so much worry just yet on the weekends that we've seen in Japanese yen so far. With bond yields continuing to rise, US 10-year bond yields continue to rise as well. That would also still put pressure on the likes of Japanese yen as well. So I would like to see this. Yes, this is a little bit tricky, a little bit because in terms of the technicals, that's why I like this. It's not safe, it's the most favorite in terms of weakness and strength, but technically it looks good. I like to see this keep above these moving averages, and that could also be interesting for this trend here. And then if you look at this as well, there's still a whole lot of room to the upside on this particular one right here. Now, for today's calendar, it's still a light one. Yes, we are expecting the FOMC meeting minutes later in the day, right, which will be interesting. All we're paying attention to here is to know how fast or how, you know, fast is tapering coming, how faster can it be, and how fast or how many rate hikes you can get in this year, right? Obviously, a more hawkish print, a more hawkish, you know, overall communication could also prove further supportive for the dollar as well. So there's that to also watch out for. Apart from this, we're also expecting more like preliminary NFP numbers. This is the ADP employment change. Interesting as well, could give us a clue for what we have in NFP. But what we've also noticed in recent time is it's not really been a good predictor for NFP. So have that at the back of your mind, but also pay attention to it. Right now, expectations for a lower contraction in new jobs added, but let's see how that plays out in the day ahead. So we're going to leave it at that for now. Thank you very much. If you have any questions, please do not hesitate to ask. I would always do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.